talking about homies that are stranded in space right now. We have Mr. Butch Williams as well as Miss Suni Wilmore trapped at the International Space Station right now. You would think that going to space, the toughest part would be takeoff. Turns out it's coming home, especially when you go in a Boeing vehicle. What's up, apes? Welcome back to the Daily Peel's daily podcast of the day. Thank you all so much for joining us here once again on this beautiful Monday, August 26th, 2024. We're very glad to have you all here with us. We got a lot to talk about here today, as usual. We're going to be starting off talking about one of the more important economic indicators that seems to be flying under the radar a little bit, but it's giving us a bit of a bad omen here going into alleged rate cuts coming in September. We'll talk about that all in just a quick second. We'll get into some of the biggest stock movers of the day and talk about why Greta Thunberg is definitely going to be adding Morgan Stanley to her hit list going forward. Then, of course, we will be finishing it up talking about a little thing that's going on in space right now that you might have heard about. So we got a big one here today. So let's go ahead and just get right into it before I start yapping for the next 3 hours straight. Okay, so the WSO Alpha portfolio down 36 basis points on the day. Not a great session, but also not one to go home crying about. Now, I do cry myself to sleep just about every night, but I won't be doing it because of the portfolio here today, so I'm feeling pretty good about that. We did manage to outperform the NASDAQ, underperform the S&P 500. S&P was down about 32 basis points for the session, whereas the NASDAQ was down 85 bips. Russell 2000 pulled one out of its ass with a 3 basis point rise for the day, and the Dow was up 16 basis points. But fuck the Dow. We don't give a shit about that because it's only 30 companies and it's for fucking old-ass people. So let's go ahead and get right into the banana bits for today, okay? First and foremost, banks are loading up on provisions for credit losses right now. It's actually kind of ridiculous how much they've been adding to it. It was the first quarter for a couple years in a row where the ratio of provisions for credit losses to assets actually increased once again. So a little bit of a nervous sign there that banks are feeling a little anxious going forward, but hopefully we can roll with it. Keep your fingers crossed and keep checking your credit score to make sure that you're not causing the problem right there. I don't want you apes bringing down the entire economy. That's my job, okay? Let me do that. Meanwhile, Apple announced their iPhone event. It's going to be occurring on September 9th, the iPhone 16. It's expected to come with a whole lot of artificial intelligence updates. Now, actually, now that I think about it did say AI updates, so maybe it's Apple Intelligence updates, but Apple Intelligence is kind of their branding for artificial intelligence, which is fucking genius, so good for them on that. Meanwhile, you know the economy is in a very tough spot when you're seeing sausage sales increase. Now, does anybody really like sausage? That might be my hot take of the day. I find it fine, like it's okay. I'll eat it with like eggs or something, or if you give me enough ranch, I'll eat just about anything. But still, nobody's first choice is to get sausage, okay? It's a very backup thing. So people are saying, all right, you know what? I don't want to spend the money on steaks or, burger meat right now. Let me go ahead and get some sausage instead. That's got to be a tough sign. So that's one of our unusual economic indicators over here at the Daily Peel Global Headquarters. Meanwhile, the secret to outperformance, we discovered it. We figured out how to beat the market well, we actually didn't discover it. I think this was Bank of America analysis. It might be somebody else, though. So I don't know. Fuck it. But either way, apparently, if you invest in companies whose CEO, whose chief executive officer is known to work out, the stocks tend to outperform. So basically, you just got to invest in all the Jack Chads that are sitting around in the S&P 500, and you will be set for retirement by the age of 35. I'm sure that's exactly what this analysis meant to say. But yeah, if you invest in companies whose CEO work out and take care of themselves, apparently they take care of the companies a little bit better there too. Finally, I got a new job for you apes to apply for. This is officially a Daily Peel casting call. It's not for Wall Street Oasis or the Daily Peel Global Headquarters, but I think you apes are the perfect pool of people to be applying for this job. Apple is looking for a new CFO. Their current CFO, who's apparently a legend in the CFO game, is dipping out. I don't blame him with Buffett selling shares. I would probably leave too, but nonetheless, there's a big job opening at Apple for any of you ambitious apes out there. Make sure to go ahead and take a look at our daily poll of the day for tomorrow as well. I don't know if it's actually going to make it into the edition because it kind of fucks up our distribution list sometimes. So we'll see if it actually goes in there. So I'm not going to say it right now to get you all guys all hyped up for it. Let's go ahead and move into the big story of the day. We are talking about the McLaren economy. Now, what the hell does that fucking mean? Are we out here buying McLarens? Absolutely not. I can't do that on this salary. Give me a break. But we are talking about the McLaren economy right now. And what I mean by that is I drive a Toyota RAV4. I think Toyotas fuck. I absolutely love a good Toyota. Toyotas are cars, they don't look great. Like, we can be honest with ourselves. My RAV4, makes me kind of look like I'm a 37-year-old mom that's going to ask to speak to the manager when I pull up to your restaurant, or if you're misfortunate enough to have me walk into your convenience store. But they get the job done. You know, my RAV4 is probably going to outlive me, to be quite honest with you. But McLaren's, on the other hand, very good looking on the outside, but they tend not to last. If you recently purchased a McLaren, if you bought one at the start of this video, it's probably not running anymore, to be honest with you. But what we're looking at right here is the McLaren Economy, because we just got a very important economic report that looks great on the surface. The headlining figures are fantastic, but once we dig under the hood a little bit, it starts to get a little bit shaky. Let's go ahead and check out what that economic report is. So we are, of course, talking about the Durable Goods Report, or as the Census Bureau likes to call it, it is the, quote, monthly advance report on durable goods manufacturers, shipments, inventories, and orders. They definitely need a catchier name, but what we need is more new orders, more so than anything. So looking at this chart, you see a 9.9% monthly increase in the amount of durable goods orders. You might say, David, that's fantastic. Why are you getting pissed off about it? Well, I'll explain in just a quick second. For those that don't know, when I say durable goods, these basically include tangible products that can be stored or inventoried, typically have an average life expectancy of at least more than 3 years. So think things like cars, appliances, computer equipment, industrial machinery. We're talking both consumers as well as business spending here. They're both incorporated within this survey. So when we break this down, the 9.9% increase, it's fantastic. It's the highest increase we've had since May of 2020. And we all know what was going on then. It's a big rebound from the month of April 2020, which was the worst month of my life since November 1999 when I was actually born. So it's pretty good. I mean, it's not a bad thing to have the highest print in at least 4 years or so. But when we break down the numbers, it does start to get a little bit more concerning. So let's go ahead and check out exactly what's going on here. So over on this far right-hand side, if you're watching on the video, you can see that 9.9% total increase. And you say, oh my God, the economy's on cocaine. Like, it's fucking busting out right now. It's doing a fantastic job. But we take a look at some of these other indicators, you actually find out it's not cocaine. It's more like we smoked like a sativa strain or something like that. So it's not necessarily terrible, but we are seeing a lot of weakness in some of the more consumer-focused areas. So let's go ahead and take a look at this chart. We saw the total increase in durable goods new orders ex transportation. This is excluding any products that are related to transportation. That actually fell 2 basis points for the monthly increase. Meanwhile, electrical equipment, appliances, and components were down 40 basis points, or 0.4%. We saw computers and electronics down 70 basis points. Communications equipment down 1.1%. Motor vehicles and parts down 2.6%. Then we have core capital goods, down 0.1% or 10 basis points. Meanwhile, defense capital goods is up 1.2%. When I say capital goods, that essentially means goods that produce other goods. That's like the industrial machinery part of it, as a very broad term. So the most concerning part of this report is the fact that core capital goods is falling. So core capital goods was down 0.1%. If you look at headlining capital goods numbers, we were up 34.3% for the month. So looks great on the surface, but what's excluded when you do core capital goods? Well, transportation equipment, and more specifically, aircraft and parts related to aircraft specifically. So that's kind of the biggest thing going on right there. To reiterate, capital goods as a whole increased 34.3% for the month. Core capital goods, excluding aircrafts, down 0.1%. So aircrafts took off last month, no pun intended. They did all the heavy lifting, again, no pun intended, but that is what we saw in the data right here. So if you include aircraft in your economic analysis, the United States is absolutely on fire. If you exclude aircraft, we're in a little bit of trouble here. It's definitely not going in the direction that we would want it to be, and we can see that in this next chart right here. This is plotting both core capital goods, new orders, as well as shipments. You can see new orders in blue and shipments in that like ambery yellow color that they have on Bloomberg. Now, Bloomberg absolutely needs to get better looking charts so that you can read it on here, but nonetheless, that is unfortunately not my job. I'll call up my boy Michael later and see if he can fix that up for us. But that's exactly what we're seeing right here, is those declines once again. So that's basically the whole story. What we're seeing right here is the Fed's rate hikes at work. So turns out higher for longer turned into too high for too long, at least for the manufacturing sector. And that's why we're seeing this continued weakness, because this was the first increase that we've seen on a monthly basis in a couple of months here, but it's still definitely not going in a great direction, especially when you exclude aircraft. We're relying on fucking Boeing to power the United States economy right now. We are absolutely fucked. Just like those astronauts that we're going to be talking about in a little bit towards the end of the piece today. But again, with Fed rate hikes coming next month, or almost definitely coming, this might not be a huge concern. We'll probably see an uptick in credit-linked purchases. So think things like appliances, especially cars, anything that people tend to buy at a high proportion with buy now, pay later schemes. We'll probably see an uptick in that with lower rates, but as of right now, it's a little bit of a concern to have in the back of your mind. Let's go ahead and move into some of our big stock movers of the day. What's ripe? We'll start off with the good boys of the day, and that is, of course, Petrobras, first and foremost. This is where Morgan Stanley is getting added to Greta Thunberg's hit list, because they just came out here and sent shares flying in one of the biggest oil majors in the entire world. Petrobras was up 8.7% on the day because Morgan Stanley came out there and said, buy the shit out of this thing. And more specifically, what they said is, with a new CEO and the reintroduction of their extraordinary dividend, it's a good time for investors to be buying. They said that it was relatively underpriced before the note came out here today, up 8.7% once again. That was really the big news. There's not much more to talk about right there, but I would be worried if I was a famous piece of art right now, because those fucking Just Stop Oil people are probably getting their red paint and spaghetti sauce ready to go and dump all over the Mona Lisa or whatever the hell is going to be next. Okay. Moving on down to our next big mover of the day, we have Papa John's Pizza. The stock was up 5.8% for the day. I don't know if I would really call it pizza, though. It's definitely Papa John's, but I mean, it feels disrespectful to other pizza places to call it a pizza place. So let's call it a slot manufacturer instead. This slot manufacturer managed to rise 5.8% for the session not because of anything they did. Obviously, their pizza is complete trash, but what did happen is the kind of like a restaurant ownership company, like basically a publicly listed private equity company for restaurants. Not that that made sense at all, but that's kind of a good way to think about it. Restaurant Brands International might be acquiring Papa John's. This is the owner of brands like Burger King, Tim Hortons, other mid-ass knockoff brands of way better companies. And then so Papa John's kind of fits right into that mix. So the stock was up on speculation that Restaurant Brands International is thinking about purchasing them and adding them to their portfolio. The reason that this rumor kind of started swirling around is because there was a plane owned by 3G Capital, a major investor in Restaurant Brands International, that was seen in Papa John's hometown of Louisville, Kentucky. Now, everybody knows there's no other reason to go to Louisville, so very interesting to see that their plane was right there. It could be a buyout. It could be a major investment. Either way, the market is hyped up about it. What the market feels the absolute opposite about right now, disgusted by, was the earnings report published by Pinduoduo. Actually, it used to be Pinduoduo. Now it's PDD Holdings. PDD Holdings had one of its worst days ever, down 28.5%. An absolute, like a catastrophe. You would think that the fucking sun exploded with the stock down this much. What happened? Oh, they posted 86% revenue growth and 144% net income growth. So what could have gone wrong with this report? The stock fundamentals were looking absolutely fantastic for the most recent quarter, but management isn't feeling too good about the upcoming quarters ostensibly. That's exactly what the market was kind of reacting to here. Basically, the big mistake that Pinduoduo or PDD Holdings made was they came out and expressed some kind of maturity in the way that executives are looking at their performance going forward, and the market absolutely hates any kind of maturity. They said, quote, "We are prepared to accept short-term sacrifices and potential decline in profitability." Basically, this is the company saying that they're going to be investing very heavily in their platform, particularly in the merchant experience, so that they can be the primary space for merchants to list their products versus competitors like Shein, like TikTok Shop, Alibaba, all those other ones where they have, I can only imagine child workers doing most of the packaging and shit like that for them. So PDD is effectively saying we're going to be investing heavily into this. It's going to hurt profits for a little bit, and the market completely dumped it. I'm a little bit surprised because it's kind of like the Amazon model, so I would think that this would make portfolio managers horny to get in while they can. Maybe now that it's down 28.5% on the day, they'll start pouring in, but we'll have to wait until tomorrow when you're watching this video to find out. So let me know what's going on if you are kind of following that stop. Finally, our last stock mover of the day, we have Icahn Enterprises. This is Carl Icahn, the iconic investor himself. The stock was down 11.5% for the session. This guy, Carl Icahn, has cemented himself in the same league as Brett Favre and Joe Biden. Like, he wishes he retired much earlier than he actually did. He's got to at this point, because Icahn Enterprises is out here. They're seeking to raise about $400 million in cash through an at-the-money equity offering. That's what they came out and announced yesterday. So obviously investors were a little bit upset at the potential dilution that's going to be hitting them, at the definite dilution that's going to be hitting them. Keep in mind, this comes just a few weeks after Carl Icahn disclosed that he had to pay like a $2 million fee to the SEC for improper disclosure. So again, it's a little bit shaky. We're offering equity. We have improper disclosures going on. Maybe there's more problems under the hood that the market isn't seeing right now. That's probably why the stock was down 11.5% instead of like kind of a more normal reaction when you're raising equity at a certain percentage of your total market cap would be more like a 5% move, but they more than doubled that. So obviously the market kind of smells something a little bit deeper going on here. All right, let's go ahead and move into our final story of the day. We are talking about homies that are stranded in space right now, or more specifically, we have Mr. Butch Williams as well as Miss Suni Wilmore currently trapped, not strapped. They wish they were strapped, but they are trapped at the International Space Station right now. You would think that going to space, the toughest part would be takeoff. You know, for the ship that took these two to space, it took about 1.5 million pounds of thrust. You would think that blowing up like more than 1 million pounds of TNT would be the scariest part. Turns out it's coming home, especially when you go in a Boeing vehicle. And that's really the big problem that's going on here. But let's take a step back real quick and take a look at the chart that I have prepared right here. This is something that you guys are definitely going to want to take a look at. It's a little bit there's too much going on here to cover it in the video, but go ahead and read the piece. Take a look at all these charts because investment in space is going absolutely crazy right now. Investors are flocking to this thing like women flock to Pete Davidson when he becomes single again. So you know it's a hot market going on right now. And what's going on specifically that made us want to talk about it here today? Well, it's the big fuck up from Boeing. Who's surprised? Absolutely nobody. So basically what happened was on June 6, 2024, the anniversary of D-Day, Butch Wilmore and Suni Williams, I think I fucked up those last names earlier, but Butch Wilmore and Suni Williams left Earth on a Boeing Starliner ship. This is Boeing's competitor with SpaceX's Dragon vehicle, with NASA's, you know, whatever the fuck they're called now. It's not Apollos anymore. Whatever the new program is, it's basically Boeing's ferry to low Earth orbit. So low Earth orbit is the easy part of space to get to. I don't think it's necessarily easy to get to any part of space, but it's definitely easier than whatever not low Earth orbit is called. I don't know what the acronym for that is, but nonetheless, this is the spacecraft that Boeing developed to ferry human beings from Earth to low Earth orbit. And on its first trip, they're already fucking it up. Who is surprised? Absolutely nobody. So this capsule was meant to return in December with Butch and Suni aboard to bring them back home. They were basically going up as kind of more of a test flight. It was the first manned flight for the Starliner vehicle, and NASA said, no, you are not bringing our astronauts back because there's a whole lot of technical glitches going on there, typical Boeing fuckery that you would come to expect by now. And so NASA basically said, we don't trust the Starliner capsule to be able to bring back our astronauts safely. So what did? They went ahead and tapped SpaceX and said, all right, we're going to have to rely on you guys to get these guys back. So Butch and Suni, unfortunately, are not coming home in September. They're going to be coming home in February of 2025 instead. And Jesus Christ, this just, I mean, more so how it speaks to Boeing's fuckery. It's just the general fuckery in the U.S. space ecosystem. It's like, how could something like this happen? Clearly, there is something going wrong with our, you know, space industrial complex, military industrial complex, whatever you want to call it for Boeing. I mean, when you have giant companies like this that you allow to essentially become monopolies in the country and oligopolies globally, with Airbus as kind of their only other equal, at least in the aircraft side of things, then obviously things are going to get a little bit hairy. It's the way that these government incentives are designed. It's, you know, it incentivizes expediency more so than quality. And so we can't be too surprised that this fuckery is going on, but I'm just glad that we have, you know, companies like SpaceX that develop actually flyable space equipment that people can use going forward. But more broadly, investment in space is absolutely blowing up in the United States, globally, from governments, private investments, venture investments. That's exactly what you're seeing right here. So Morgan Stanley is projecting that by 2040, one of the biggest area of investment in the space industry, according to Morgan Stanley, by 2040 is going to be one that doesn't even exist right now. And that is apparently internet that's going to be powered in space. Broadband is going to be a huge one as well. So be looking at those areas for growth. Absolutely do not invest in anything that Boeing does related to space. Obviously, I think that kind of goes without saying at this point. But that's essentially the end of the day for us. We feel bad for Butch and Suni, but SpaceX has got to be feeling great right now that they were tapped on the shoulder to come in and save the day. All right, like I said, that about does it for us here for the day. We actually managed to keep this one under the length of your average sitcom, so I'm very proud of myself with that. Not particularly proud of my softball team's performance tonight. Many of you regulars might realize that are watching on this video that I'm wearing my typical softball uniform here. Won our first game, lost our second game. One of my homies actually broke his nose, so we still managed to fuck up the game even though we were playing for him. But still, nonetheless, we'll see if he survives the night, but, you know, it's not looking likely with a broken nose. We know how much damage that can cause. Okay, Let's go ahead and end it right here. Thank you all for joining us once again. It is now 10:14 p.m. on this beautiful Monday, August 26, 2024. We will see you guys next time. Happy investing, happy trading, and bye now.